Hey, Bulls and Bears. It is Thursday, September 23rd, 2021. Thank you for joining me. A quick news roundup for you this evening. Hopefully, you're watching this on Thursday evening. If not, it's probably Friday morning. Either way, thank you for being here. We're going to talk about the markets, including the housing market, the stock market. We're going to talk about another devastating jobless claims number that just came out today. The record net worth of U.S. households. We're going to talk about what's behind that and why it's not as good as it seems. And actually, it's pretty bad when you dig into it. And how bad would it be if the U.S. were to default on its debt, if the debt ceiling weren't increased? And I know not many people, including probably nobody on this channel listening right now, nobody expects that to happen. There have been delays in increasing the debt ceiling and government shutdowns that were temporary, but nothing that actually triggered a default. But let's look at this article right here. This is out of CBS, and they asked the question, U.S. debt default could wipe out 6 million jobs and 15 trillion in wealth, Moody's says. So what happens when the checks stop being sent out, when programs are no longer able to pay out the monthly checks, the benefit programs, etc.? Well, spending collapses. What happens when spending collapses? Well, we know most of the U.S. economy is based on consumer spending. So when the checks stop being sent out and when programs stop being funded, well, many jobs can vanish at the snap of a finger. But think about what's happening right now, even without a default. The U.S. is seeing very sluggish job growth. And in fact, we're still losing more jobs than we're gaining. Of course, the cherry-picked unemployment number, we know that doesn't factor in so many people that are long-term unemployed. But think about all the money printing, the stimulus, the deficits, record deficits, and yet we still have over 300,000 new jobless filings each and every week. Right? And this is happening without a default. Imagine a shutdown or a default. I mean, you might see Mad Max overnight here in the United States. Let's take a look at the weekly jobless filings. We know it's been over 300,000 each week for the past few months. When you go back to deep into the shutdown recession, at the very beginning, it was close to 700,000 jobless filings each week. Well, here we are now. We're 19 months past the initial stage, the initial shutdown because of the illness. And yet we still see 350 plus thousand jobs, new jobless filings each week. But it doesn't matter to the markets. The markets still continue to zoom higher. And at this point, I don't know how anyone can't figure this out. They can't see how these markets are being manipulated. Today we had the S&P 500, Dow Jones, and NASDAQ all in the green. Not by much, but considering all of the bad news coming out, all of the risk with the real estate investment company Evergrande, the number of new jobless filings, the debate on the debt ceiling, well, markets don't seem to be worried at all about all of these situations that are in our face right now. Remember, the Dow Jones climbed from 18,000 up to where we're at now, over 34,000 during a pandemic. So if that doesn't wake a few people up and let you know what's happening, well, I don't know what will. All right, next, let's talk about household net worth. On the surface, it looks like everyone's getting rich. This is out of the Hill. U.S. household wealth rises to record high, but at the same time, debt has also risen to record high. So yes, the assets are higher, the prices are higher, home prices, the stocks are higher, stock market. But at the same time, we're under record levels of debt, not just the U.S. debt, but consumers, the average homeowner, the most debt we've ever seen beyond the housing bubble. But when you look at net worth, this also factors in the top 10% and the top 1% as part of this record wealth. Here's the problem, and we've put this out there before. Here's the statistics. The top 10% own about 80% of all stocks, and the top 1% own about 50% of all stocks. So when they say that US households have record wealth, yes, on average, but the problem is there's a few people at the top that are making the most money, and that really skews the average. When you look at the bottom 50%, most of the bottom 50% are middle class or working class, has more debt now than ever before. All right? But in the end, this is paper wealth. You're not realizing the gains until you sell. So how many people are selling their stocks and cashing out? How many people are selling their homes and cashing out? And if you do cash out, where are you going to live? Because now you're going to move to another home and you have to either one, buy it, or two, rent it. And either way, it's very, very high prices that you're going to have to pay. Now, if you're leaving California and moving somewhere like Ohio or Indiana, Kentucky, Tennessee, those states, of course, you're going to see much lower prices and you're going to have some cash left over. But remember, these paper gains can be gone in a flash, and even the paper gains right now, they're mostly in the hands of the top 10%. So yes, record wealth in the US may seem like a great thing. Everybody's getting rich. Not exactly. Let's talk about the housing market. Real estate, still red hot, still not enough supply, still a lot of people bidding on homes. I talked to a customer today. Over 18 bids on his home in 2 days. It was under contract in 3 days after being listed. That was in Las Vegas. Las Vegas hot, a lot of hot housing markets still. We're not really seeing much of a cool down. Now this article here talks about the sales are falling, but keep in mind a lot of it is because not enough inventory on the market. Home price inflation is cooling. Our home price is falling. No, they're not going up quite as fast, but it doesn't mean they're falling. And we told you this was going to happen. We told you there would be no housing market correction, that there would be no price drops. Now, if we did see an actual shutdown of the government, or if some other plug was pulled on the money printer, then yes, you could start seeing home prices fall. But aside from that sort of rare or improbable event, you're not going to see home prices fall. They can keep home prices going higher and higher and higher with endless lending, endless market propping. They can also fund institutional investors, and investors can come in just like they did in the second quarter with record amounts of home purchases, and mega institutions can come in and buy as many homes as they want. The median home price increased about 15% from a year ago. It's now $356,700. That was August. Back in May, the year-over-year increase was over 23%. So home prices are still going up very quickly, just not as fast as they were back in the early spring, or in this case, late spring, early summer. So what does this mean? Well, I heard someone put this term out there today, actually, an inflationary depression. So when people think depression, they think falling prices, markets crashing. What about an inflationary depression? So in a depression, so many people lose their jobs and they can't afford to buy anything. Well, same thing in an inflationary depression. You still can't afford to buy anything when prices get up so high. And that's why you see more people taking on more and more debt, because they can't afford to just pay cash for goods, products, and services. I even saw a commercial today for a $40 or $50 set of bed sheets, sheets and pillowcases, and they offered to finance it. It was like something like 4 payments of $15. I mean, come on. I mean, it's debt creating the wealth illusion. Most households are buried under massive debt. If you're out of debt, you're in the minority. And hopefully you're sleeping good at night and out of debt. But if you're not out of debt, you're not the Lone Ranger, because that's most of the U.S. working class. Thanks everybody for watching this report, the wealth illusion, the paper gains. What do you think about this? Hopefully see you down in the comments. Thanks for watching. Stay well, stay safe, stay prepared. Bye.